Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we're going to give an update on my margin play where I'm using a dividend paying ETF. In this case, we're going to use QDTE. We're going to collect those weekly dividends. We're going to be on margin, so we know we have to pay margin debt. We figured out all the numbers, and here's the basic rundown. I was going to use about $61,000 in margin. We were going to buy about 2,000 shares of QDTE, which means I'm $61,000 on margin, but I would have only purchased about 1,554 shares of QDTE. But for this purpose, this video, we bought 2,000. So we're just going to lump it all together. And all of this is in and around the numbers. So let's give that update right now. We're using QDTE. We bought 2,000 shares, $61,000 on margin. This is how it works out, or this was the plan. I'm going to show you how this is working out, so stick with me. QDTE pays about $1 a month in dividends. They pay them weekly. The margin debt, because I have a small account, is going to be about 10%. We're also going to pay taxes with this income, so we're going to minus 25% in the end. So with all of that said, around $2,000 a month in dividends, $503 in margin debt will be paid every single month. We're going to pay about $373 in taxes. So the free and clear money, after we pay the margin debt, after we pay taxes, $745 free and clear using other people's money. Now that sounds incredible, too good to be true. Well, it's actually true. Now, whether it's too good to be true, you're about to see that maybe not so much right now. Because right now, we're filming this video on March 3rd, 2025. The NASDAQ, for which QDTE trades daily covered call options on the NASDAQ, and they pay weekly dividends. Well, they use the NASDAQ, so we're going to use the NASDAQ in comparison of where QDTE is trading relative to where the NASDAQ's at. And right now, the NASDAQ is down considerably. Before I go to the next screen, this sounds perfect in a perfect world. It's not, because QDTE has fallen with the market. Now, I'm still collecting a lot of money. Now, I'm going to show you at the end how much have I collected so far, but this is the setup. Now, when we look at the NASDAQ, I'm using August as a reference because right now, on the right of the screen, we are down 13% as of the close of March 10th, 2020. We get uncertainty in the stock market to the point where they're selling it off. And we know that once we hit 10% down, that's a good correction. The NASDAQ's always going to fall a little bit more. It's more volatile. The S&P 500 is down about 9% right now. So if they're going to start buying this thing back, it'll probably be when the S&P 500 touches 10% down. But the NASDAQ is down more because it has all those high-tech stocks in it, and it's more volatile. So as of right now, the NASDAQ is down 13%. I use August, or what you see on the left side of the screen, where it was down 15.4% for the last correction, or profit-taking rug pull, however you want to look at it, because that's how I see it. We're taking 2 steps forward and 1 hell of a step back. You can clearly see right there, back on August, they sold it off 15% and they bought it right back. And then we get to the point where we have uncertainty in the market with all these tariffs. The administration is saying a lot of things, and it's now a risk-off trade. It was also a risk-off trade back in August. And then it became a risk-on trade, and look at how they rallied it. I suspect they'll do the same thing. But with that said, that's just commentary on where I believe the market's at and where it's going to go. Look for us to at least have a dead cat bounce because when they sell them off, they do come back and buy them again. Because look, there's so much money in Wall Street. Oh, where are they going to put the money? They're not putting it under anybody's mattress. They're going to put it right back in all these great stocks. I'll tell you what, Apple is trading in and around its support line. You know they're going to come back to Apple, and same with Nvidia and Microsoft. So with all that said, how has QDTE held up with the NASDAQ itself falling some 13% in this absolute rug pull of a profit move for which Wall Street does all the time, and that's what they're doing right now? We're going to see that QDTE is only down 11.8%. And they've paid considerable dividends. Now, I'm going to show you those dividends here in a moment, but this is what QDTE has done during the same time period. So one thing that you'll hear all the time in these high-yielding dividend-paying forums, videos, and discords is that when one of these stocks fall, it's NAV erosion. Now, this is a misnomer because that's not the case here. We have NAV distributions where they distribute to all their shareholders a dividend on a weekly basis. This thing trades the NASDAQ. So the NASDAQ moves up and down, QDTE moves up and down. So that 11.8% is not NAV erosion. It is tracking the NASDAQ for which it trades. Just like any other buy right covered call, closed-end fund, or ETF, it's going to move with what it tracks. What we have is we have the market falling, QDTE tracks it, and it falls. So here we are. We're down 11.8% on QDTE. It's paid very nice dividends. The NASDAQ's fallen 13%, and it doesn't pay a dividend. And before we move on to where we're at right now, which absolutely is the kick in the nads for me, I just want you to notice that this too has happened, and this too will pass. There's so much money in the stock market that they rally them up. It's so stimulated that they're going to take profits. They're going to take profits. I have been in this game for over 12 years selling premium, writing covered calls, selling cash secure puts. I've seen this time and time again. And this is no different. This is why I'm showing you what happened last August, because I want you to sit back, take a look at that picture, and understand that that's how Wall Street plays it. Because there's a lot of clickbait videos out there saying that we're going to fall 50%. Well, they said we were going to fall 50% in August. Did that happen? It did not. So what happens now? We probably trade off a little bit more because remember, the S&P 500 hasn't fallen 10% yet. And then the feeding frenzy begins. They're going to buy all those great names, which means all those indexes are going to start to move because they're in the indexes. And if anything, we get the dead cat bounce. You can see here on the right where when it fell 15.4%, we did get one heck of a dead cat bounce rally. It peeled back and then it moved forward. That's what happens, and that's probably what's going to happen to the NASDAQ here very shortly. Same with QDTE. In fact, QDTE back in August rallied even higher than the NASDAQ did. So I love this sell-off. Why? Because it takes the fluff out of the market. And now Wall Street comes back in and they're going to buy on the cheap. Yes, we weren't there. We didn't benefit. We're the ones holding the bag. But that's what happens. See, Wall Street does this all the time. So if you're sitting there freaking the hell out, what I need you to do is sit back. I want you to notice what has happened recently. And if you draw this back even further, you'll notice this is what happens. Now I'm going to leave you with this because we're going to go to the dividends next and where I'm at with QDTE because it ain't good. Remember what Jesse Livermore said over 120 years ago. One of the greatest investors you do not know, Jesse Livermore. Read his book, Reminiscence of a Stock Operator. I've listened to it 5 times. It's over 120 years old. Everything in there is relevant today. And back when he was trading, there was literally 300 stocks and you can manipulate all day. Totally different then than what it is now. But the lessons you learned from that book carry on to today. And I want you to know something. To be a trader at Goldman Sachs, you have to read that book. Reminiscence of a Stock Operator is one that I watch and I recommend. Jesse Livermore. In that book, when young investors would ask him in down markets what to do, they would tell him they're stressed out, they can't sleep. Jesse Livermore would say to them, sell down to the sleeping point. Look, you don't have to be prideful here. There's no falling on the sword to keep dead weight trades. We always have the opportunity to sell down to the sleeping point, collect ourselves, reboot, and then come back stronger the next day. Look, at the end of the day, this is as emotional as anything else. Got to keep the mindset clean, clear, and ready to go. Now let's take a look at how I'm getting kicked in the nads. And yes, my mindset should be absolutely ripped in half, but it's not. Because I've been in this so long, I've seen this so many times, this is just the way it is. So the NASDAQ's down over 13%, QDTE is down 11.8%, and here we are. Right now, since I got involved, I bought 2,000 shares. I bought them at $39.41. Right now, it's down. In fact, it's trading for around 36x. I am down $8,250. Now, you can see there where I've collected 3 dividends. We haven't even collected all the dividends yet for this 1 month period, which I'm reporting on. $1,100 we've collected in dividends. I'm down $8,250. So that is flipped upside down. In a perfect market, this would be great. Even if QDTE traded sideways to down a little bit, I'd be up. But I'm not, and that's not where we're at. Where we are at is that the NASDAQ is down, the markets are down, and I'm down $8,250 on QDTE. But I'm collecting the dividends. See, this is the saving grace to this kind of trade. When you collect that dividend, you can go to sleep saying, hey, I'm down. It trades the NASDAQ. Is the NASDAQ going away? Of course it's not. So I just have to wait it out. And while you wait it out, it pays you weekly. So this is one thing I want you to consider. Use index-based dividend-paying ETFs because at the end of the day, you're using an index. This index consists of 100 of the biggest, best stocks on the planet. Are they going away? Of course not. But if you're in a single stock risk, and there's many of them out there, YieldMax has many, you don't know right now. Look at YieldMax Coinbase's version, Coiny. That thing has been literally ripped from 23 and might be trading for $7 today. Use index-based ETFs largely because they trade the indexes. Look, if you don't want synthetic trade ETFs, this one being a synthetic trade ETF, then look into ones that will buy the NASDAQ. They will own the NASDAQ. And then, of course, they will trade. That could be QYLD. And I believe QQQY, you'll have to correct me on that, QQQY buys the actual underlying ETF. QDTE creates a synthetic trade for which what they do is buy call options, long-dated call options. They call them LEAPS call options. And what they do is when they buy that LEAPS call option, they're able to write near-term covered calls against the NASDAQ. So what they do is they write out of the money daily covered calls. And that's how they collect that premium on a daily basis. And then they distribute that to their investors every week. And if you have quite a few shares, you can see you could actually get paid a good amount of money. Now, where am I at with this trade? You see the 20,000 and the 17,364. That is my non-margin buying power. Many people on YouTube now call this a buffer. Well, it's called non-margin buying power. And this essentially is your buffer. When I placed this trade, I had potentially another $20,000 I could have put into this trade, but I didn't. I wanted some buffer. The market was just about to sell off. I kind of knew it might. So we got that buffer. Look at how that buffer is performing today. First of all, understand the margin requirement on QDTE is 30%. It's one of the lowest ones out there. If you use some of the YieldMax single stock funds, you're going to find that you might have to pay much more. Using ones like XDTE and QDTE and WDTE, 20 to 30% depending on the brokerage, mine considers it a 30% margin requirement. That means about every dollar I put in, they'll give me 3 for 1. I could have borrowed more. We're not going to do that because we're not going to be stupid. We don't want a margin call. And sure enough, the market tanked. And although I didn't anticipate this, I did, but even though I didn't want to believe it, it happened. Okay, that's just the brutal truth. Well, my margin buffer or non-margin buying power has moved from 20,000 to 17,000. What does that mean? That means the market could continue to fall. I could lose even more money here. And as long as my non-margin buying power does not fall from 17,000 down to 0, I will not get a margin call. And now with this market falling and then going to rebound, I'm just going to collect all this money via the dividend. And you saw what the numbers look like in the very beginning. We are borrowing $61,000. We're going to collect that dividend. We're then going to pay the margin debt and we're going to pay the taxes. And in the end, free and clear using other people's money, cash on the table, $745. This is very interesting. I truly need you to understand every aspect of using margin before you do. All these people on YouTube make it sound so simple, and what happens is you're out there with a small account, you leverage yourself up, and something like this happens. And now you're getting margin calls and freaking out. And you got to tell your spouse that you got to cut a check, or you have to do something you've never done before, so you're calling your brokerage, you're freaking out. Okay? We can be very measured. Just make sure you make a good decision. Do your homework and understand what the risks are and how much this is going to cost you, and make sure you have some buffer, non-margin buying power. Am I sweating this trade? I am not. QDTE is going to roll with the NASDAQ, and the NASDAQ is going to get bought up again. And this fat $8,200 that I'm down on, it's going to move up. And I bet it moves green before the middle of the year. Hey, I don't have a crystal ball and nobody pays me, but I've seen this happen so frequently, I just embrace it, we try to trade it, and here we are. If you have any questions, feel free to comment below. There's so many people out there that might be able to give you some good tips on using margin in cases like this. But here is the deal. Do know your margin buffer, non-margin buying power. That is what's going to help you in a market like this so you don't get a margin call. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable. Now, hey, look, in the description below, I have a 1 free month offer to my membership. You know, I trade covered calls. I trade cash secure puts. We generate cash flow so we can buy these dividend paying stocks I'm talking about. You literally have the golden goose of investing when you can write a covered call against shares you own or use your cash and generate a premium. That is the golden egg for which you then take that money that you just printed, and you could buy a dividend-paying stock. We go from the trade mindset to the wealth mindset, where we use a semi and passive investment strategy using a passive investment strategy where we get paid doing nothing. Now, look, my membership is simple. You sign up, I give you 1 free month offer. You're going to get all my trades. You're going to see every single one of them. And if you're interested and you want to follow a trade, you can actually follow the trade. You can use the phone app. You can use the blog post. You can use the email to see why I entered the trade. Now, with this market being down, we're doing a lot of 1 day, 2 day trades at the end of the week to try to generate some income while this market is fluctuating. Just last week, we generated over $3,500 in a 1 day period. And all we're doing is selling premium against the shares we own. We're picking those strike prices that are just out a bit so we don't have our shares taken away. We generate that premium. So in this market for which it's fluctuating and you might be sitting on your hands, we're not doing that at the membership. You can see every single green check mark is cash flow. Now, I am down just like everybody else on a lot of our positions, but we could use those positions to generate cash flow. Now, all the members get to see all of my trades, and you could see this is one of them that closed on Friday, where we wrote a 1 day covered call on my BidX. We own the shares at BidX, and we're down, but we went ahead, and when the stock was trading at 43.19, we did a 1 day covered call using the 49 strike. That is definitely out of the money. And using our expected stock move calculator, for which you would have access to, that's the strike price we picked. We ended up picking up a decent premium, and out the door, we ended up making some $624 in this short window trade. If you'd be interested, I got a 1 month offer, but here's the deal. In that phone app, look at what you get here. You get the exclusive videos that you don't see here on YouTube. What we're doing is talking the markets, and I have ideas. That video right there talks about using DPST. The one before was a poor man's covered call on VRT. I explain the real time value cost. You can see we also talk about reading the charts, using margin, how to decide when to enter a trade. You can watch that right in the phone app. Just click on it. There's no ads. Watch it from start to finish. Hey, look, in the description below, 1 free month offer. Would love to welcome you aboard.